Now, first things first, let's talk about the OMO bid we saw yesterday. What are your thoughts on what happened? I mean, traders say nothing was sold, of course, because banks feel that rates should be higher, and of course, there's enough liquidity in the system currently. I mean, what are your thoughts on that, OMO or open market operations?
The thinking of banks is that the current levels of 12% overnight and OBB is not really the level that they'll be interested in buying OMO for those long-dated instruments. The reality of it is that in just some few days afterwards, you might probably see interest rates going back to 16%. So to that extent, that is why you see that the participation at the OMO yesterday was such that the banks were bidding in anticipation of what is going to happen to the interest rates in the near future, rather than currently what is happening.
Well, Dare, certainly the CBN feels that there's still a lot of liquidity in the system that it needs to mop up. Let's talk about this Friday, because we're expecting some maturities coming through, specifically 46 billion naira in bonds and, of course, 34.47 billion naira in OMO bills. What do you expect to see this Friday?
Yeah, on Friday, we're going to have 46 billion maturity of bond. In addition, currently, we opened the market yesterday with about 150 billion. So that added, we have about 200 billion in the system. Now, but the exchange rate is really the issue for central bank. They don't want too much liquidity in the system that will push up exchange rates. But the exchange rates have really been supported. So in terms of liquidity, liquidity will be there. But to the extent that you still have more oil flows, you have foreign investors flows, and exchange rate remains stable, then it should not really be too much of a worry for central bank. So the liquidity will be there, but with mop up, possible OMO mop up, and then with the continuous sales at the WDAS, then you might see the liquidity get out of the system.
Well, Dare, then what are your thoughts on what happened in the WDAS auction yesterday? We saw the CBN offering and selling about $250 million. Now, you're saying no pressure at the CBN window. There's enough supply on the interbank market, but we're still seeing the amount of dollars offered at the WDAS going up. It actually went up from about 100 and something million sold last week.
Yeah, the comparison, it has to be with what happened in the previous weeks. In the previous weeks, we have a situation where the interbank market was actually trading below central bank effective levels, and that makes a lot of clients to come into the interbank market to buy funds rather than going to the WDAS, and that is why you saw those low demands at the WDAS. Now, that trend has changed slightly. What we have currently now is a situation where the interbank is trading slightly above central bank, so you have more customers now getting interest in the WDAS. And that you are still going to continue to see until probably when there's a new next auction that is going to bring in large funds also from the offshore, or if we probably see large inflows of dollar sales from the oil companies, then you probably see a situation where the market will turn again, and then you'll be trading below CBN, and then clients will rather buy from interbank than go to CBN.
Now, Dare, before I go into some other CBN's move, I just want to quickly ask you about the T-bill. Are we continuing to see a good demand, robust demand, with foreign investors sort of rushing to our T-bill, our fixed income market, of course, on the back of the fact that JP Morgan added our government to its bond index? So what are you seeing currently? And in terms of yields, are we seeing yields going up or down? Give me a picture.
For Treasury Bills, the interest for offshore has really changed after the JP Morgan index listing. What we see now is that you see more participation and more interest in bonds rather than in Treasury Bills. Now, in terms of yield curve, the expectation before was that at 15.5 becomes a comfortable level for them to go. But currently, most of the bonds, especially the long-dated bonds, are at around 15.3%. And so there's probably going to be a new level of entry. And so what is going to be our stop? Probably at 15% is probably where the market is eventually going to settle, especially from that October 1 when the listing is actually done.
Right. Now, Dare, let's talk about a recent move by the CBN. Now, it announced that it will be redesigning our currency and, of course, introducing a 5,000 naira note. Now, that decision doesn't seem to be so popular right now. What's your take on that decision?
I think the problem is not really the higher notes for me. For me, the problem is more of the lower denomination. We have a situation where inflation was on the high, and then we left our notes and coins at the same level without appreciating them also with inflation. So a situation where, for instance, now the single coin we have, the biggest of them is 1 kobo. It's 1 naira, sorry, I mean to say. Now, what can 1 naira buy in the market? Absolutely nothing. So, but the reality of it is that if you change where the major bulk of purchases and you turn them to coins, really you have more effect on that, because the reality of it is that if, for instance, you have 200 naira as coin, will people spend it, or would they move prices of goods and commodities that are currently 50 naira? Would they move them to 200 naira? The reality of it is that they may not. And if you have to encourage actually a cashless society where you want to encourage cards and internet banking, then if people don't like to carry coins, then they will probably have to carry cards. And so the infrastructure has to be in place. Now, if you have to look at it also even from UK, in UK you have even £5 in coins, which is what makes everybody to carry coins all over the place, because £5 in coins is, you are talking about 2,250 naira. So that is in coin. But in Nigeria, you have 1 naira in coin. What can it buy? It cannot buy anything. So it's not really about the higher denomination, really. It's really more of you not dealing with the fact that inflation has so moved, prices of goods and services and commodities have so moved up, and then you have your notes and your coins stable. They have not moved over the past years, and that is the challenge that we really have. We have £50, we have $100. All these are far, far higher than 5,000. So it's not really 5,000 that for me that is the issue, but rather where the main currencies are supposed to be in terms of the coins.